Here we go, everybody. Good morning, good afternoon to some, and everyone alike. Is that this is the Dow Jones. When we told all of the MMTs here that we were going to come down very hard back over here at 12,800, and we had 1,000, and I said that we would have about 1,000-point haircut. And what has happened is during that 7 weeks, 6 weeks on the Dow, is that we finally came down and made a major bottom down here around the line, that 11,947 right here. We kind of undercut it, but this is the weekly, total weekly reversal from this downtrend that started here. So it's very important to know that the red line is a 20-week and a 10-week moving averages. The neckline of the major part of that breakdown occurred right here at 12,402. Granted that we have closed 1 week, 2, 3, 4 weeks, and this is still the 5th week below the blue line. That's the 10-week. This was a bull rally top here with that long reversal that we said we were going to have, that correction. This is the first major up week to this reversal trend right here. This is the top of this trend, and we're going to bring this trend line down about right there to this 12,000 mark. What we have done is that the right side of the body is on the outer side of that diagonal trend line going there. This is where we look to see how we have broke this downtrend that we would leverage back up in the reversal of the Dow downtrend. The Pacifics were that when we were making these weekly lows in here, we said clearly that the market had sold off too fast, too hard. The percent DS was 89 up here. Here we hit a low of 34% DS. Now the percent DS is working its way up here on a weekly movement. The upper resistance, though, is going to remain here. We will have to consolidate here on the outer side of this trend line to say that we have broke the downtrend completely. It is definitely a short-term oversold relief bounce rally. Individual stocks had sold down very hard through that period of time. We had hit the bottom where we said that this part of the correction of the trend was going to have a reversal. The jury will still be out as to how this reversal sets up. One of the things that point to interest, MMTs, will be this horizontal trend line right here. This is where major, and we're slightly above it here. However, let me caution everyone. We are going to have to get above these weekly moving averages like we did over here. And these weekly moving averages are going to have to turn around. There's going to remain volatility. We have earnings season coming up July 11th. We have end of the quarter portfolio rebalancing. We have the end of month buying coming in where people are finding value. Most of the move was over Greece headlines, by the way. And then some people that were short-term equities was a place to be because those prices had come down substantially in the Dow equity components, each individual of the Dow. So there was buying opportunities there. As far as short-term oversold markets, we only treat them that it is short-term to buy oversold markets. Overbought markets were short, but oversold was to be bought. That the move for this whole month here, meaning that this is the last week of June. The other 3 weeks we were still selling down, putting in lower lows, and putting that base in. So the earnings that do come in July, if we are going to, this could be the beginning of a summer rally, but the downtrend is not totally broke. Until I have a closing above these key weekly moving averages and a consolidation, the market remains vulnerable, volatility remains high, earnings are going to have to come in, there's going to have to be some resolution to the debt ceiling, there's all kinds of other headlines. But most importantly is where corporate profits will be starting July 11th with Alcoa. And that during this nice correction that we had individual equities, and all across the board it got to very nice oversold conditions, which also provided the risk reward. The risk was that if you were holding all the way down, you had risk up here. But when we start making bottoms and we're going to make oversold conditions, that a lot of that risk comes off of there and that risk on trade comes back in. And that's exactly what we had happen in the Dow. Once again, these moving averages will serve as resistance right here. That moving average is 12,327 right there, the 10-week. The 20-week, the red line is flattened out. We have to get a close above them. We have to have a follow-through week in order to break back up toward these highs and or pull back, consolidate, then break higher. So the jury is still out on the Dow.